Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of EURJPY, Euro, Japanese Yen. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis, and do not forget to check out the Forex analysis playlist for the analysis of other currency pairs like Euro USD, Pound USD, USD JPY, and many more. So let's get started. So this is the 4 hours chart of Euro JPY, and as you can see, I have got two lines drawn on the chart. First and foremost, I have got this red line in the form of support here, which is 129.61, 129.61, and you can clearly see that right now market is respecting this level as the support for the market. If I zoom out the chart, you can see that previously when market was in a range here, it was considering this level as the support. And when market fell this time, market is still respecting this level as a valid support. Therefore, 129.61 is a valid support for the market. And market will be respecting this level as a support. Clear? On the other hand, you can see that I have also drawn a trend line here, which is a dynamic resistance for the market. Because if we just look at these candles here, or if we just look at the chart here, forget about these lines and all, just focus on these candles, then you can clearly see that this market is in downtrend, and there is no doubt about it. Let me remove the drawings and show you. Now you can clearly see that this market is in downtrend, and we get the confirmation from this lower highs here, because market is trying to recover, or whenever market is trying to go up, yes, it is going up, it is scaling high, but it is unable. The market has failed every time to cross the previous high, which means that, or which gives us the confirmation that this market is still under the dominance or the influence of the sellers. Sorry. And which means that the number of sellers are higher in comparison to number of buyers. Therefore, we can draw a trend line here. In your charting platform or in your trading platform also, you can draw this trend line, and I will request you to draw these lines in your charting platform, so that you can analyze the chart better, so that you can understand the chart better. So these two are the important levels for the market. And if we go to the weekly chart once, then you can see that in the weekly chart also market is going down, market is in downtrend, but overall the structure is towards the upside. Market has sadly crossed the support level on the weekly chart. That is a sad thing. But the most important thing that people generally do not focus is that though market has formed red candles, though market has crossed the support level, but still we can see that there was some price rejection from below, which means that buyers are there in the market, or buyers are still present in the market, and they try to take the price upward. And in the next week, they may get stronger and they may try to take the price upward. Okay, so do not think that this market is under the dominance of sellers. That means you can short the market anywhere. That is not like that. And after switching to the 4-hour chart, let's discuss about the strategy of the market. So what should be a strategy for the market? So considering all these factors, considering the buyers, sellers, lines and all, okay, the most important level in this market is this level as of right now, 129.61. So let the market open on Monday and just see where the price goes. You do not need to trade in the middle. As I always say, do not chase the market, let the price come to you. So let the price come to the support zone, or go to the resistance zone. In case it comes down to the support zone or 129.61 level, just observe the price. If you see price being rejected from below, or if you see that price is trying or market is trying to reverse from here, then you'll get the confirmation that yes, 129.61 was a valid support for the market, and 129.61 is still a valid support, and you can go for buy here if market reverses from the 129.61 level. On the other hand, if market goes up from here, then you may get a good opportunity to short the market at this resistance. As I've already said, draw these lines in your trading platform to get the better understanding. So if market goes up from here, what you need to do is observe the market once it hits the resistance level or the trend line. When it will hit the trend line or reach the trend line, just observe the price, try to understand the market emotion, try to understand the market psychology. If you see price is struggling near the resistance level, or price is facing difficulties in crossing this trend line, then you'll get the confirmation that yes, this trend line is seriously a dynamic resistance for the market, and you can short the market here. On the other hand, if you are looking for much more safer option, then whenever we get a pattern like this, descending triangle pattern like this, then there is a possibility that market will cross this support level. This pattern is called as descending triangle pattern. Okay, descending triangle pattern is generally seen in a downtrend market, and in descending triangle pattern generally we see selling pressure and market crosses the support. So if you are looking for the safest option available, then you just wait for the market to cross this level. Wait for the market to cross this support level, then you can short the market. When market will cross the support level, you can short the market, because this is a descending triangle pattern. Clear? Okay. Lastly, I would like to take you to the Forex sentiment meter once. You'll find the Forex sentiment meter on my website avillashhazarika.com. Under the Forex 101 section, you will find the Forex sentiment meter. And if you're looking for a signal service, I have the link of signal service also. Okay, it doesn't belong to me. I have just pasted the link. Okay, so you can see that this is a Forex sentiment meter, and 48% traders have taken short position and 51% traders have taken long position. And considering the Forex sentiment meter, we can clearly understand that retail traders are confused right now. The overall traders are confused right now. They have no idea where the market will go, whether the market will go up or whether the market will go down. Okay, so if you do not want to trade in the middle, then you can avoid. You can just wait for the market to cross this level to short the market. Okay. Otherwise, if you want to take some risk, or if you have got some experience on Forex trading, then you can go for buy order here. If market reverses, you can short the market here if market reverses from this level. So these are the trading opportunities in the chart of EURJPY right now. So hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See ya on Monday.